While the dog is barking outside, that's a reminder to us, a warning, that there's some things we should not buy when we first enter the stock market. Do not buy options. Do not be a day trader. Do not buy or sell puts or calls. If you don't know what they are, don't look them up. You don't need to know. If you're just starting in the stock market, you definitely do not want to get into day trading or options or puts or calls or derivatives. I also do not recommend buying stock in a partnership. When you're buying stock in any company, check it out on the internet. I use Yahoo financial pages myself, but there are many sites with financial information, and you can find out a lot about almost any stock once you know the stock symbol, and you can get the stock symbol just by putting the name of the company into a search bar at any financial page. For example, General Motors symbol is GM, Ford's symbol is F, AT&T symbol is T. And if you put those symbols into a search at a financial page, it'll tell you about the company. It will tell you how many shares traded on that particular day, whether the stock went up or down, what it did in the past week, what it did in the past 6 months. And do not buy a partnership. Let me finish that thought. The reason for not buying a partnership is because of the tax forms that are required when the end of the year comes around and you have to report your earnings on either the sale of the partnership or whatever dividends the partnership might have paid. There are forms which are dreadful to work with on income tax. I do all my own tax filings, my own forms. And for a partnership, if the partnership did business in 20 states, you have to fill out income tax forms for each of those states if they have a state income tax. So I do not recommend getting into partnerships. When you're just starting out, get into something that is easy for you to understand, and I recommend just regular stocks. You can look at things like price-earnings ratios. The lower the price-earnings ratio, the better for the stock. That means that if a stock cost $100 per share, and in the past year the stock made $5 in earnings, then the price-earnings ratio is 20. If a stock cost $100 and in the past year the stock made $10, the price-earnings ratio is 10. Now you don't want to just buy stocks with a low price-earnings ratio. Sometimes a stock that made no earnings in the past 5 years might be a stock that's going to double in the coming year. So you definitely want to research whatever stock you're getting ready to buy. You buy low, you sell high. You sometimes want to hold on to a stock if it's paying good dividends or if it seems to be going up forever or doubling every so often. Sometimes it's a good idea if you get into a stock and it starts going upwards very rapidly and it does double or triple, sell some of it. Get your money back out of it and let the rest of it ride. Things to do in the stock market. Of course, you want to do your research on any stock. You do want to buy a diversity of stocks. You don't want to buy all fast food companies. Don't buy McDonald's and Kentucky Fried Chicken and all the other Wendy's and so on. Don't just buy a whole bunch of those. Buy one stock that's into fast foods. By the way, you know what the stock symbol is for Kentucky Fried Chicken and Taco Bell and Pizza Hut? That used to be owned by Pepsi. Now the stock symbol, it was spun off by Pepsi. It's a private company now, and it's YUM, Yum Brands. I don't recommend any of these things, by the way. I'm just telling you these are things you can research. CAT, you know what that is? It's Caterpillar. That's a stock also you might want to research. Some stocks go year after year with earnings increases. You can actually screen a stock at Yahoo Financial or almost any financial page. It'll have a place where it says screener, and what you do in the screener is you say, show me every stock that has had an increased earnings for the past 10 years. Show me every stock that pays a dividend over 5%. Show me every stock that's under $20 that has a price earnings ratio of 15 or less. You can put in screeners and find almost any type of stock, and then you decide from there what it is you want to buy. REITs are an interesting stock vehicle that's out there right now. REIT, Real Estate Investment Trust. You might look into some of those. ETF. Study ETFs. That's exchange traded funds. You can buy or sell a mutual fund through your broker, but a regular mutual fund, whatever the price is at the end of the day, that's the price that you pay for that mutual fund if you buy it, or the price you get for it if you sell it. An ETF, an exchange traded fund, you can buy and sell throughout the day. You can buy it at one price at 9 o'clock and a different price at 10 o'clock. You can sell it at a different price at 11 o'clock. But mutual funds have only one price during the day. So you might look into exchange traded funds. Find out what that is all about. And when I mention REITs, one of the things that most people aren't aware of, a real estate investment trust, that obviously is a vehicle, a financial vehicle that invests in real estate. But they don't all invest in houses. Some of them invest in malls, the big malls where everybody shops. Sometimes they were built by some REIT, some bunch of investors who have a real estate investment trust that invests in the malls. There are also REITs, real estate investment trusts, that invest in, believe it or not, prisons. They have correctional REITs. There are actually states which have prisons that are at least partly run by private enterprise, and people can invest in them. You want to invest in a prison? Look it up, see if that's something you want to invest in. We will be back with more information about buying and selling stocks, but for right now, remember, buy low, sell high.